Come allez-vous? How are you? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis, the overriding goal of planning our trades in advance. Now, why would we do that? Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Buongiorno, Felipe. Hey, good to see you. I've been gone a few days, so I missed you. And we get back today, which is a very, very, very interesting Thursday. Yes, there's a day trading group later today, a swing trading group later today. But what's very, very strange is tomorrow's non-farm payrolls and it's Good Friday and the markets in the United States are closed. You know, has that happened before? Like an NFP when the markets are closed? I don't know. I don't really remember such. Maybe there has been. Maybe it's happened a couple of times, but it's still rare. I stink. Anyways, so that means maybe today's stock market's going to have extra emphasis because people either need to get their trades on or hedge tomorrow's risk because you can't hedge tomorrow. And if the numbers come out awesome or horrible, you might be on the wrong side of your position, son. So traders might be forced to hedge today. Interesting. So anyways, holy smokes. So good to see you. I've been gone a bit. So what I call this a cold start. I'm going to go through the market and check under the hood, see what's been going on without me, and try to get, seasonality in tune with reality. That's always the big job. If you were with me last week, I did a quarterly outlook that tried to incorporate where we've been economically, where we are now economically, and try to project where the economy and market will be in the next 3 months. It's a bit tricky. So you got to look at the economic data, the trend in economic data, the change in trend in economic data. You got to look at the monetary policy, the trend in monetary policy, the change in monetary policy, right? And then contrast and compare market with seasonality. What the market is doing irregardless of all of that stuff, and then what usually happens, compare and contrast. So that's what we did a week ago. And so my job now is to stay in tune with that. I don't remember the link to the video. I don't think, is it still up? Yeah, I think it's up for another day or so, that video. Hey, it's $11. Don't sign up. So anyways, that's that. But literally I got back last night. So I'm a little bit discombobulated. So I call this cold start. We'll go through that. And maybe there's a lesson in how to do a cold start. Cool. Tim says the quarterly outlook was very good. Thank you. Appreciate that. I'm always worried. I want to look pretty for you. So anyways, cool. Now, in the description below, there are links that are important. One is to my book, Strategic and Tactical Forex Trading. If you've read it, purchased it, or read it, please leave a review. I'd appreciate that. The second thing, there's a link to fxbootcamp.com, a community of foreign exchange traders that have been leading almost exactly 20 years now. I mean, literally, I think maybe May will be 20 years. But who cares? Who's counting, right? Every single day is the most important day. So anyways, inside that, there's 88 hours of training videos, not little videos of me babbling. That I do that every day for free. But like, let's say university coursework type videos, like legitimate education videos, $88 for 88 hours. I think that's a fair deal. I also have some live groups, like today. The day trading group and the swing trading group are meeting to plan next week and the rest of the month of April. Sweet. There's a link to quantbox.co. Oh, snap! The super secret fundamentally based alert service is now available for a whopping trial, $7.80 for 7 days. Huh. And I'm telling you, it's one of the prettiest things you'll ever see. Okay? I mean, I'm standing there looking at the statue of David the other day, and I'm like, QuantBox is way prettier than this thing. Look at this guy. Huh? So anyways, QuantBox is pretty, but it's informative and helpful. So check that out. And then lastly, but not leastly, we all need a foreign exchange broker. There are many out there, but Trader's Way is mine. They're good, they're fast, they're affordable, they pay good swaps. But the bottom line is they've earned my loyalty and respect, and I recommend them to you. Do your own due diligence. Don't be silly. Don't listen to some YouTube guru. Don't take my word for it, but check them out. I'll push you in the right direction. Go check them out. Download a demo. Play some trades. See if they can earn your loyalty and respect like they earned mine. Oh no, Cash's Discord has been hacked. No! Yeah. So anyways, thank you for the welcome backs, everybody. I appreciate that. I did miss you. Had a good time with the wife and kids. All right, so let's take a look. Dollars week. That makes sense to me. That's what we talked about in the outlook. So that's good. Seems like a high five on that one. Aussie's still weak. Pound trying to hang in there. Euro being, let's say potentially impacted as being the anti-dollar. But also remember, if you compare monetary policies between the ECB and the FED, what you'll find is there is a divergence, and what you see here totally makes sense. Yen is going to get interesting, and you can see I've already drawn this line here. And again, that has something to do with the quarterly outlook that I did. And what we see might be something developing that was predicted. I don't think there's enough evidence yet to start high-fiving and claiming victory. Sort of George Bush on the aircraft carrier. Mission completed. Mission accomplished. You're like, wait, that whole Iraqi war thing was not apparently over in 3 months. It was over in 20 years. But anyways, so you can't claim victory yet. Don't put the Top Gun jacket on yet. But anyways, it ain't not working. Or is it not working? I don't know. I'm not good with double negatives. But nonetheless, and then Swissy looks like my Credit Suisse stock. Will the price of Bitcoin fall and drop? But it's not a good question. You're asking will, and you should be asking why. You'll never know if it will. So, Usman, it's a bad question. Okay. Will it? I don't know. But we could talk about why it might go up or why it might go down. Major different question. All right. So, holy crap. I want to skip gold. We'll come back to gold. Gold is not that surprising. But this is the one Lucas crushed. What was it? The swing trading group 2 weeks ago or 1 week ago? Was it 1 week ago? No, it was 2 weeks ago. Yes, can we discuss it? Sure. I discuss it in pretty great detail in the outlook So remember, I trade fundamentally, so if you watched a video a week ago, nothing's changed. Okay? But anyways. Yeah, a couple of weeks ago. Oh, I hope you're still in it, Lucas. I hope you're still in it. I've been watching, right? I've been watching from my phone, cheering for you, Lucas, and I'm not even joking. Not even joking. I'm like, oh la la. Ooh la la la. I like tequila. Yeah. So anyways, I hope you're still in it. Just nailed it. Look at that. So anyways, oil way up. And, well, we always talk about the basis. What's the basis for a rally like this, right? Is it supply and demand? Well, that's sort of a cop-out answer because it's always supply and demand. Epic. Let me get my Epic pen. Let's see. No. Oh, no. What gap? This gap. Yeah. Oh, so you got out before then. Yeah, well, look. But, riding that 4-hour 21 is ooh la la, huh? But anyways, Lucas, whether you're in it or never in it or in it a little bit, here's the thing. There's this, as we're always in learning process, right? But here's the thing. I know you did your analysis technically and fundamentally. I know you discussed with us, things like seasonality. And you're like, you see it coming, you foresaw it, you saw the higher high, this one here, okay? So on and so forth. So even if, let's say, you never got on it, this trade, the first part, you did very, 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 very well. Incorporating technical analysis with fundamentals. I'm trying to change the color here. Wow, I can't use my mouse anymore. That's how rusty I am. Anyway, so I know you looked at this and you planned it out. And that's the first step. If you can't plan it, you'll never trade it. But just because you planned it doesn't mean you traded it either, right? So whether you got it a little bit, got it a lot, all that kind of stuff. Congratulations, because, it's still, you did the analysis correct. Okay? And so imagine 1 year, 2 year, 3 year, 4 year, 5 year, 6 year, 7 year, 8 year, 9 years more of trading experience. You'll just get better and better and better and better at the entries. But if you can't do the analysis, then you don't have a chance. So anyways. Cool. So anyways, a big part of this, I believe, is seasonality. Okay? Seasonality. Can't wait to be better. I can't wait to be better. Yeah. Yeah. So anyways, cool, man. Cool beans. But I do believe there's a lot of seasonality in here. A lot of seasonality. Okay. Okay. The other trick to this, and it's probably, I think, the hardest thing in trading is, let's say you were a bear on this for a long time. You've been a bear a long time. It's hard to stop being a bear. Way harder than predicting a reversal. Because I can tell you, almost every dip here was some sort of bull predicting a reversal. Right? I think in here, Knowing or analyzing, or I guess not knowing, that's not the right word. I suppose deciding to stop being a bear, which you may have done. Maybe you haven't. That's fine. We don't know. But I think that's the hardest thing to decide on this chart. Very, 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 very difficult. Because there's no handlebars on this bicycle, so to speak. Like, the only thing going on in that massive drop, all the way down to 64, the only thing that says up. Okay? The only thing that says up is seasonality. And again, guys, if you're like, what the hell is this seasonality he keeps talking about? Go to quantbox.co. And in the $8 trial, you'll see 20 years of analysis that says up. But that has nothing to do with market conditions. It has nothing to do with Fed policy. It has nothing to do with the pending stock market crash. It has nothing to do with the debt ceiling. It has nothing to do with nothing. It doesn't have anything to do with high inflation. It doesn't have anything to do with the current world around us. Okay? But every year is different for the farmer. When does it stop snowing? When does the snow melt? When does the water evaporate? When do you till the soil? When do you plant the seeds? When does the sun come out? When does it rain? Like, there's all these variables that a farmer doesn't know. But a farmer is probably thinking in North America, hey, look, it's middle of April. Typically, I should be out in my field doing something. And if it's rainy today, or if there's still snow on the ground, well, maybe I should get my tractor tuned up. Maybe I should pump some air in the tires, change the oil. Change the fuel filter. Okay? Lube some of the parts. Do what a farmer do in preparation. If you don't know anything about farming, just think about the day before a battle. You should probably sharpen your sword and maybe do some yoga. Do what do you call it? A dirty down dog, and stretch your back. Okay? Stretch your arms. Right? Drink some herbal tea and prepare for battle the next day. Okay? Frank says, hey, wait, I have a very important question. Shh. I'm a euro dollar only trader, and I'm very concerned about all these talks about de-dollarization. What do you think is going to happen to the US dollar long term? First of all, I dedicate, Frank, in my book, an entire chapter outlining why your strategy is wrong. Okay. Just want to let you know on that one. Second of all, your de-dollarization is not going to impact tomorrow or today. So you're grasping onto the big pictures, but tomorrow you got to trade, or today. Tomorrow the markets are closed most places around the world. But whatever, man, you're worried about precisely the wrong things, Frank. Now, on the big picture, it's going to happen. But also, all of humanity is going to die one day. We're going to be wiped out by ourselves through disease. We're going to be wiped out by a nuclear bomb. We're going to be knocked out by an asteroid hitting the planet. But that shouldn't keep you in your bed tomorrow morning and say, I can't get out of bed. What's the point? The world's going to end, right? So I'm being facetious here to make a point. That is going to happen, Frank. in the next 5, 10, 15, 20, 30, 50 years. So you still have to like get up in the morning and make money. And so don't worry about the de-dollarization. Okay. But we are in the very, 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 very beginning of that process. Yes. Okay. Yeah, see, Lucas is going out in the field today. He's got things to do. Okay, that's how a farmer do. So anyway, so Frank, the dollar, what will you think the dollar will happen long term? Yeah, it will no longer be a reserve currency. For sure. We'll probably move into a hybrid mode. That's what we thought 15 years ago, 20 years ago. We thought we'd have a dollar and a euro sort of dual reserve currency, but the euro is flawed. So now we go back to the dollar, but now we're like, what about renminbi? Okay, yeah. RMB, though, is not a globally traded currency, but maybe it will become so in 20 years, in 30 years. I don't know, 5 years on the fast end. But here's the thing. We don't have a fair, balanced rule of law in China. We don't have sort of a legal system in which a foreign company can sue a local company and get fair representation by rule of law. We don't have a deep and liquid bond market in China. So it makes absolutely no sense for RMB, right, the Chinese currency, to become a reserve currency. Quite frankly, it's kind of worthless. It's not even freely traded. It's right, like supply and demand doesn't dictate the price. The government dictates the price. So, right, so you take all the institutions away that are required for a reserve currency. China doesn't have any of it really. So it might take another 50 years for all these international institutions like rule of law and justice and a deep liquid market for bonds and all that kind of stuff, right? So there's some maturity. Now, it's going to happen, but for a very, very, very long time. Now, right? Oh, I lost my next train of thought. Okay. However, some countries like China and Iran or India and Russia can start trading with each other using a current, in particular over oil, to be traded in a currency other than the reserve currency. Well, why? Why would they do that? Well, because they've been cut off from the reserve currency, which is actually a very, very dangerous thing. It's probably one of the biggest gaffes since probably international policy from what's his name? I'm not a crook. Oh man, didn't get enough enough sleep. What's the guy? What's the guy that said I'm not a crook? Gee whiz. President. I have Carter in my mind, but it's not Carter. Nixon. Thank you. Probably the worst international gaffe since Nixon handling or creating the oil crisis. We're also in a time when the Fed has made some very big mistakes since the Carter administration. So yeah, we're living in a time of very, very big mistakes, for sure. And could it lead to the beginning of the end? Yeah, probably. But it's like being 30 and being consumed by the concept of death. You are going to die, even if you're 30. But you should be worried about the beauty of the world and of the love and inspiration all around you. That's what you should get out of bed excited, not depressed that the world's going to come to an end and you're going to die. If you want that, move to France, study existentialism, and write dark poetry about how everything is pointless. What's the point? You're going to die, right? So anyways, don't worry about the end of the reserve currency. It's going to happen for sure. Has the process began? Yes, but there's no replacement for a very long time. But the process has probably begun because of massive mistakes from people that should know better. But whatever. So going back to this, zoom back in. Yes, this is somewhat predictable. But the problem, and like I said, the fact that it's gone up is gone up, fine. But knowing when to stop being a bear is by far the most difficult, most complex part of this chart. And the real learning experience here is not predicting up, because a lot of people could have predicted up here, they could have predicted up here, here, and it didn't go up, so you wouldn't feel like a genius. You would have been profitable, but not as profitable as being a bear. So how do you know to stop being a bull? Oh my God, because now you can say, oh, well, you should have known. Yeah, that's a bit of hindsight. Okay? So the only thing, the reason I said this is like riding a bicycle with no handlebars, is that yes, it has gone up, and the only thing that could have helped you as a bear is knowing that seasonality says get ready for some up soon, relatively soon, in the next few weeks, in the next 8 weeks, next 5 weeks, next 3 weeks. You don't really precisely know, like a farmer doesn't know exactly what day he's going to plant. Every year is slightly different, but every year is basically the same. So you know basically to be ready for the up. So you could have stopped being a bear here. Or you manage your risk by saying, well, you tell yourself you'll stop being a bear if we go above this. Or you'll stop being a bear if we go above this. Or you'll stop being a bear if we go above this. Now what we're doing is technical analysis, and every single one of them is right because it's based on your decision. You now know fundamentals combined with technical analysis, and you want to stay short as long as you possibly can because you are a bear. But you can see this coming like anyone can see spring coming. Now, is this spring going to be hot, cold, wet? I don't know. Okay? But you can predict spring's coming, right? Frank's like, hey, thank you very much, Wayne. I thought my career was going to end tomorrow morning. Yeah, I don't think so. But look, dude, Frank, buy my book. I'm not telling you that because I'll make $5 if you buy my book. Buy it used and I make 0. Okay? But read the chapter that I've written dedicated specifically to should you trade euro dollar only. That idea just absolutely makes no sense. Okay. Okay. So, yeah. All right. Let's look at where we are here. Gold. Here's our roll reversal. Easy peasy lemon squeezy. Look how nice that is. Little kickoff to 21. So the target here, I guess we've already done the swing trade on this. So I think we're planning for the rest of the month. Huh? Ride the 21 up to 2100. Interesting. Okay. It fits in the seasonal outlook or the quarterly outlook. The weird part about this is, you know what? I look at this and I see OOP down to the CP. And that tells me next week the stock market's going to crash if that happens. Whoa! Whoa! Is that possible? Or is this just toit? Well, looking at last month's pivots, this ain't toit. Last month was as logical and predictable as you could possibly get trading. This is such a logical, obvious trade last month, and we're still in that trade, which also supports the idea that we're OOP. And then that says, well, if that's true, then to next week, the dollar's going to get strong. Really? What would make the dollar get strong? I guess the stock market crashes, huh? Thank you, Santiago. I don't really care about weekly jobless claims right now, but that's cool. Thank you. It just goes back into the model. So anyways, wow, that's what this chart says to me. Ooh la la la. Okay. Yes, Santiago, talk to me when it's like negative 80,000. Well, I mean, I guess this is claims, right? So no, plus 500,000 or something. Anyways, yeah, we already know the beginning is begun, right? Yeah, sorry. Yeah, I misspoke. Yeah, holy smokes, huh? Okay, Aussie way up as expected. S&P 500 way up. You can see we kicked off the roll reversal. Look at this. We're just trending inside my trend line. Let's go to a smaller time frame. I mean, look, it's all been predicted. It's all been outlined. It's doing exactly what we've said. So, no big deal. Hua. Okay. Now, you can see the dangerous part is if you wanted to be a bear, you could start to enter. And I think that's what's going on here. So when I do my gold outlook and I say, oh my God, that's a stock market down next week. Well, could it mean something like this? Or could it mean something like this? Well, hell's bells. It really depends on what NFP will be, you see? Frank says, okay, I'll get the book now. Yeah, again, I'm not pitching the book. It's more like there's a whole entire chapter dedicated to what you're doing, so you might actually be interested. So anyways, this is set up to if, remember, it's an if then. If there's a downward move coming, it's soon. And then you look at gold and it's kind of saying the same thing. So you're like, ooh, so even if you're a bull and this keeps going up, you should still be aware of the risk. Okay, because remember, your job is to accurately predict the future every single day. And there is information on this chart that you should be aware of. So we don't, like somebody said earlier, what will the stock market do? Well, how the hell would I know? Okay. Okay. It's more like, shouldn't you be interested in this as a bull? Okay, and shouldn't you be threatened by this and maybe this area here as a bear and maybe this area as a bear? Like, what would a bear do? Oh, a bear is going to take this downtown, right? Down like Julie Brown. Okay? And a bull would try to buy it back down here, right? And a bull might try in here, right? So what have I done? I'm trying to predict the future. I don't know what it will do. Bad question. But more like, what should I be prepared for? Well, I got to filter this through what my intentions are. What are my intentions? If I'm a stock market bull, okay, I can try to buy in the moving averages. That's just a moving average strategy, which gets me that level. I can buy in here, which is a position strategy. Okay? That's all I got right now as a bull. That's all I got. And the second one's not likely to happen today. So what's my day trade? Well, I either buy in there or I'm not a bull. Simple. What else could you possibly do? Oh, well, we all know we can make up 10,000 reasons why to buy this. But that's the only one I see on this time frame. I'm between the 2155, I can buy a dip. Now I can drop into smaller time frames. I could look at daily pivots. I could use price action. I can use all of that. That's all lovely because that's tactics. But if you don't know this, then you don't know jack. Okay? So now I get rid of that as a bull. And then what could a bear do? Well, a bear has many more opportunities today. Okay? What about a double top? Well, I guess, to me, it looks like a double top should be a little higher, actually. Which would be a scenario where a bull buys and then we make a higher high. That's what it says. If a bull is correct today, they're going to make a higher high. Maybe. Depends, right? Depends where the daily 21 is and all that. I talked about that in the last swing trading group, so we already know that. So now it's more like, how do I set this up as a bear? Well, I'm going to have an opportunity here, and I could have another opportunity here, but not today. Okay, so that ain't going to happen. So, oops, undo. No, I can't undo. What's this timer? Ooh, that's new. Noise. Okay, you erase this and say, well, what second opportunity could I have today? Well, what if it drops to the lower low? Okay, and now we're going to use this as resistance. So then you would kind of like fib here to here, and you might get sort of like this. But even that feels like tomorrow, doesn't it? But the global markets, maybe not Forex, but the global markets are going to be closed tomorrow. Banks are going to be closed tomorrow. So I'd be careful trading tomorrow. Yes, I got that, social. Okay. So social, if you think the world is going to come together in unison and buy or sell Bitcoin because of the founder's birthday, I mean, look, I don't even get it. Who cares? It's irrelevant. So what? Okay. Anyways, so that's that. There's a lot of information and details in these charts. Okay? And as you can see, a lot of risk on right now. Stocks are moving. Gold and oil's moving. Very nice. Okay. Double bottom here. Okay. In a couple of weeks, I think there's another peso rate increase. Oh yeah, sorry. Can we discuss Bitcoin? Sure. Okay, so what's your outlook, Usman, for global macroeconomics? Risk on or risk off? And what makes you risk on or risk off? What's your economic outlook for, let's say, the next 3 months? Okay, well then Bitcoin goes up. Simple enough. The rest is just technical analysis. Okay? Oops. So right now I have a lot of concern because it's not doing anything. We're out of position. And in fact, this shows down hard. So if I thread the needle here, markets close tonight. NFP comes out in such a way that the markets feel it's bad. So let's say it's a big number. Okay. Let's say tomorrow's a big number. NFP comes out and is a big number. What's a big number? I don't know. That's your opinion. Okay. Big number. The Fed has to continue raising interest rates. Well, we know what Milton Friedman said. If you have 6% persistent inflation, then to get inflation down, you'll probably have to have 7.5% interest rates. Okay? And to say it different, like I don't think we can get inflation below 4, let's say. The best case scenario. So if big I is 4, okay, then yeah, 5.5 is a good number for little I, interest rates. Okay? But if instead 5.0 is our big I, then we got to go to 6.5 on little I, and we're nowhere near having that priced in. And so the only way to get that is, let's say NFP comes out tomorrow and it's 427,000. And the market's like, oh God. Oh God, we're nowhere near the end. Oh my God. And the market freaks out. Now, we know the facts. And I spent hours going through the facts. So it's not necessarily time to freak out. But the market can be wrong. The market may not have things priced properly. And that's the inefficiency of the market, and that's where we make our money. Because we trade informed. So anyways, this market may not be priced properly. And one scenario is NFP comes out red hot. And we do one of these things. Okay? Well, first of all, read the chart. I can't even fit this in here. Read the chart. What does this chart say? Well, if you are a bear, which means you will get a trade tomorrow if non-farm payrolls is a big number. The bigger, the better for you as a bear. So if you're risk off, this is an easy scenario for you. We're going from here to here. We're going all the way back down. Now, it's not going to go in a straight shot like that, but that's your strategy. You're like, you're a bear. You're risk off. Well, dude, that's that. What's the big deal? That's simple, right? So now you'd have to thread that needle a little bit and say, well, that means it would be a big move here, big counter move, and then big here, and then we get on this new move. And over the course of weeks, we're going to at least retest this double bottom. That's a bearish point of view. And so then you ask, well, if that's what's going to happen over the next month, what economic results would trigger the market to be so bearish? What sort of conditions would need to happen? Well, the only way to do that is a big NFP. That says to the world, the Fed's got to go further than what's been priced in now. So they have to buy more dollars. Buying more dollars pushes this down, which means why are people buying dollars? Well, the stock market's falling. Oh, the stock market's falling. So if the stock market's falling, what's happening in gold? Oh, gold is falling. Easy. Okay? But here's the thing. When people ask me, will this happen? How the hell would I know? I don't know if that's going to happen, but I know if something like that's going to happen, what would trigger it? And therefore, I can look for that information. Maybe it's only short-lived. Maybe next week is a bad week, but then the bulls re-engage. Well, where would the bulls re-engage if bulls are going to re-engage? Well, that's easy too. That's why we do technical analysis. Okay? So you start with technical analysis. If you don't know technical analysis, you don't have a prayer. Okay, so you start with that. But then once you got technical analysis down, technical analysis is what most people do is backward looking. So there's nothing predictive about it. It only describes what happened yesterday, last week, last month, last year. Some people go out a year and they're like, well, back in 2015, this was support. All right, bro, that's you do you. Okay. So anyways, you do some technical analysis. Now, I like pivot points and price action because they're predictive. They're not backward looking, they're forward looking. Okay, cool. Moving averages I like too, but they are lagging. I like leading over lagging, but lagging is also helpful. Okay, cool. So you get all that down. Price action, pivot points, and you can use oscillators, which are fine. You can use moving averages, which are fine. You can use. I don't think you need both. If you understand the math of your oscillators, you don't need them on your chart because you should just look at your chart and be able to do the math with your mind, or at least get the experience to be able to do that. So once you get technical analysis, okay, that's the easiest part. Okay, now it's more like, okay, then you got to go through the if-then statement. If you can draw what's going to happen in the future based on technical analysis, then you can ask yourself the if-then statement. Well, what fundamentally would need to occur for this bearishness to happen? Okay, remember the orange arrow is strategy that just says M3 to M1. The blue arrows are more tactical. Okay, down to support, false rally. Down to support, sell the rip. Okay, false support, right? Sell the lower high, roll reversal price action. It's just simple price action. And then you can go to the next stage and say, well, if this turns bullish or returns to being bullish, where would that turn likely occur? Because you can also get a scenario like this. Well, that's just easy technical analysis. So you have to ask, well, what would an NFP need to show us for the market to turn bullish again? Because clearly it's hesitated. We haven't had a higher high since March 16th. 2 weeks, 3 weeks without a high, and you're a bull? Why? It's the founder of Bitcoin's birthday, right? So I'm like, really? That's all you got? And by the way, I'm just joking, right? But okay, like, okay, just so what do you think? And how do you set this up? How do you tee it up? By the way, first day of Masters, whoop, whoop, whoop. So how do you tee the sucker up? Okay, the first hole is long and straight. You hit downhill at first. It goes down into a little valley, and then it goes up, 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 up. A long, straight, inclining fairway. So your second shot is into a blind green. Hey, man, you got to be there. You should see it. It's straight. It's straight. It's long and straight, but you can't see the green when you're hitting up on your second shot. So anywho, yeah, so if you were a bull, you don't believe any of this nonsense. You're like, there's no way any of this stuff's going to happen. Cool, man. Cool beans. Right? Cool. Okay, you're a bull. Awesome. So you have two plans now, plan A or plan B. So down tomorrow, up all next week. Sweet. So now all you have to do is wait, if price drops to 25,700-ish, maybe it's 25,500, whatever. Okay, it drops into this 26,000. That's for you to decide when to be RWA, ready, willing, and able. So if price drops into here, you got the pink is your first strategy. Now you drop into a 15-minute, look for your setup, take the shot, drop a stop, take a walk. If it cuts through that like a hot butter through knife, a hot knife through butter, sorry, a hot butter over knife, then you got plan B set up right around 24K. Sweet. And if that don't work, don't trade, son, because you is wrong. All right, cool. So I'm spent. I'm rusty. I'm tired. So, any last questions for today? If you're a member of FX Bootcamp, remember day traders and swing traders meet today at 4 p.m. for the swing trading group. I am looking forward to a big group hug. Any last questions for the live stream? Let me throw an ad for YouTube while you answer that. Usman says, do I think? Well, first of all, I don't think. I only plan. I only research. So I get a conclusion. It's not my opinion. There's just an economic conclusion. But Kiwi is currently very, very weak and trending down. Swiss franc, since January, okay, and in particular since the end of March, okay, is holding its own and more bullish. So you should be able to thread that needle. Like, dude, what does it say to you? Like, don't ask me what I think. I don't think anything. Okay? Kiwi's down. Do I care? I don't care. What do I think about it? I don't think about it at all. But would you buy this pair under these circumstances or sell? Should you be a bull under these circumstances or a bear? Easy, right? Yeah, Dre, you just pay the $11. What's the link? I don't know. I'm not selling the link anymore, so I don't, honestly, I just got back last night. Okay, I sat in the dark by the pool, smoking a cigar, settled down, and then brushed my teeth and went to bed. So there you go. So what's the link? I don't know. I've long forgotten. All right, well then check your email. Click on the button. Cool. So anywho, I gotta go, yo. But yeah, Dre, I don't know the links anymore. I don't know. I've been gone a week. I mean, it's in your email. So anywho, you can probably find it faster than I can. So, okay. Yeah, well, if you're not a member of QuantBox, it probably asked you to create one, and then so I don't know, Dre. So, anyways, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. If you're in my day trading group or swing trading group, I will see you at 4 p.m. It's good to be back. Thank you, everybody. Peace on earth. May the pips be with you. May your profits be above average.